Good afternoon, everyone. Welcome to this webinar today, Planning Funding for Your Business. My name is Peter Towers. I'm the Managing Director of Towers Business Development. Thank you for joining us. If you're watching this webinar on the live feed to Facebook, welcome. If you have any questions, you will not be able to log straight onto the broadcast so I can see them. So can you send me an email, please? peter@towersbusiness.com.au. For those of you who are watching this webinar live, other than on Facebook, if you have any questions during the webinar, please type in your question into chat and I will answer it later in the webinar. If you're watching this webinar later, because we've sent you a link to the recording, we're still happy to get questions from you. Just send me an email, please, peter@towersbusiness.com.au, and I will get back to you. So today we're looking at what is business funding. It's got many definitions, but this audience is primarily, I assume, people interested in small, medium enterprises. So that's who I'm going to direct these comments to. So business funding can include loans and debtors financing, hire purchase, leasing, and share capital raising. And that's the issues we're going to look at today. Let's start with loans. Normally requires security, real estate property. Not everyone has it available. Very often, in fact, virtually every time that I can observe, personal guarantees are required from the shareholders or the business operator, the partners, and in some cases, shareholders of companies. There's monthly repayment of principal and interest in most cases. In some instances, you may be able to negotiate to pay on a seasonal basis. That's up to you and your lender. Debtors factoring. Obviously, you need to be a business that's offering credit. There's normally a minimum turnover requirement that the financing organisation, whether it's a bank or a specialist financing organisation, has stipulated. SME receives advance funding on debtors' invoices. 85% of the invoice gets paid to you very quickly, 24, 48 hours after you lodge the claim with the financier. The bank or financier has a charge over your debtors ledger within your business, and that will come with all the appropriate directors or owners' guarantees. One trap with this, I've seen people get caught on this. They assume that they're free to deal with their debtors as such, especially when they're dealing with someone other than their bank. And then they find out that their bank, in their general charge that they've taken over the business, has a charge over the debtors. You may be able to negotiate to have your debtors released, but along the way, I'm sure that's going to cost you something. So that's something you need to be aware of before you go too far down the track in looking at debtors factoring. Hire purchase and leasing always require personal guarantees. There's obviously monthly payments, or in some cases, you may be able to negotiate seasonal payments. So let's now move into the capital raising, because this is where I think there are some real opportunities for you to do something different rather than the borrowing, having to put up an asset. The company or the business might not have that asset. You might have to go and borrow your mother-in-law's home unit to use this as a security. That's not always advisable or available, or it might not be preferable, depending on your personal relationships. So let's look at what you can do as a company. Now, you have to be a company to raise capital. But if you're currently trading as a sole trader or a partnership, you could talk to your accountant about rolling the business over and putting it all into a company so you can have the benefit of that company status. Under Section 708, and this has been in the statutes for 35, 36 years now, a company can raise up to $2 million in a 12-month period from the public without having to issue a prospectus. The maximum is 20 investors in a 12-month period, but you need to be aware that private companies have a 50 shareholder limit. So if you went to the market this year and raised, even if it's only $500,000, but it's from 20 investors, and you may have already had 3 or 4 shareholders, you now got 24. Next year, you perhaps want to do the same thing and raise $1 million. You can do so, and if it's 20 investors, you're now up to 44 shareholders. So it doesn't take you very long to reach the 50 shareholder limit. Pardon me, and there's no further avenues to go any further then, unless you undertake a crowdsource funding capital raising. We're going to talk about that shortly. It's important to note that you cannot advertise or market that you're raising money as Section 708. I don't think you can even put articles on social media about your capital raising attempts. So the investors will normally be family or close friends and associates, people who you can basically talk to on a one-on-one basis, if you know them. And because of the informality, it's fairly easy to raise this money fairly quickly if people know you and you can outline what the benefit is for them. Normally there's minimum documentation required, but that minimum documentation, I think, just out of courtesy to your investors, should be an updated business plan that really outlines the vision of the company, where it's going, who the directors are, who the leadership team members are. And it should also include the predictive accounting reports for budgets, cash flow forecasts, and projected balance sheets going forward for the next 3 years, and an organizational chart, who's who in the company. So that's Section 708 of the Corporations Act. You don't have to get any government approval. You just go ahead and do it. The only requirement is at the end of the capital raising, you've got 28 days to lodge the return of allotment of shares with the Australian Security Investment Commission. Early stage innovation company status. This was brought into play about 4 years ago as part of the current government's innovation policy, which was announced in December 2015. And then it took a couple of years to get it all through Parliament and get it all sorted out. So we've now had early stage innovation company capital raisings going on all over Australia for the last 4 years. And it's getting momentum, primarily because people are finding out about it. So strange as it may seem, this particular status was created by amendments to the Income Tax Act, not the Corporations Code, the Income Tax Act. And you might say, why? Well, investors can receive attractive taxation benefits. And these benefits are subject to 20% of investment as an income tax rebate for the investor. Now, there's upper limits. The maximum rebate for a sophisticated investor is $200,000. And if they can't use it all up in the current year, they can carry it forward until such time as they've used it up. A sophisticated investor is someone who has a net worth of $2.5 million, or for the last 2 years has earned over $250,000 income, gross income, as their amount declared in their income tax return. If you are a sophisticated investor, you obtain a certificate from your accountant to certify that those requirements have been complied with by you. Not all sophisticated investors identify themselves, and if they don't, well, they're retail investors, and a retail investor has a maximum rebate of $10,000 because the maximum amount that a retail investor can invest in an early stage innovation company is $50,000. The government wants people to spread their investments rather than putting all their money into one company. There's no restriction on the amount of money that a sophisticated investor can invest in a company. But the government takes the view that a sophisticated investor, if they've got that amount of money, should either know the way businesses operate themselves, or they can pay an advisor to review the company setup. The other big benefit that an investor gets is as long as they hold the shares for longer than 12 months and less than 10 years, they don't pay any capital gains tax when those shares are sold. So if the company's had a very good result, that's a great benefit for an investor. And if the shares are still held after 10 years, the company's revalued at that time, which could probably mean it's not valued very high at all, or it might be valued very high because the company really is onto something, and just that this shareholder who hasn't sold their shares yet, so their cost price is amended to what their proportion would be of that new valuation at the end of 10 years. So the company's normally under 3 years of age, but in some instances it can be up to 6 years of age. And if you want more details on that, I will talk to you about that. The company's income must be less than $200,000 for the last 12 months, not including any grant income from the Accelerating Commercialisation Grant. And that's the only grant that's singled out, the Accelerating Commercialisation Grant, because it's a grant that's closely associated with this whole process. Because we're normally starting here with someone who's been undertaking research and development activities and now wants to raise money to commercialise them. The company's expenditure for the last 12 months must be under $1 million. The company must pass one of 2 tests. Once they've passed one, that's all that's required. So let's start with these tests. The first one is the principles test. And it's and this test requires 5 questions to be answered with a detailed report. In my opinion, a minimum of an A4 page of information. Definitely not a yes, no answer. The Tax Office and Oz Industry, who are the adjudicators of this particular status, whether the company meets the requirements to be an early stage innovation company, wants more information. So is the company genuinely focused on developing for commercialization one or more new or significantly improved, so it doesn't have to be brand new, significantly improved products, processes, services, marketing, or organizational methods? Is that what your business is doing? And if your turnover is under $200,000 and your expenditure under $1 million and you're under 3 years of age, you might be of interest. Does the business have high growth potential? So that means anywhere in the world. Is it the business able to successfully scale up? In other words, the government's wanting to encourage businesses that can grow. You currently might only be a very small company that might arguably only be worth $50,000, but can it grow? Can it grow to a company that's got a turnover of $10 million a year? Is there potential for broader than the local market? So if your product's only suitable for the Sydney metropolitan market, it's probably not going to get approval to be an early stage innovation company. The government's trying to encourage people to broaden their horizons to at least cover the whole of Australia, unless there's particular reasons why the product that you've developed won't work in a particular market. but they really want you to be looking at the world, at what's on the globe. Can you service it? Does the company have competitive advantages? What sets this product apart? What's going to make people want to buy it? Now, if you can't pass that test, you then move into the gateway test. So the gateway test is a little bit different. You must earn 100 points. So I'm going to go through some questions here now. They've all got points allocated to them. And the company has to accumulate over 100. Research and development expenditure. If you have research and development expenditure that equates to being more than 50% of the company's total expenditure, you earn 75 points. You only got to get 100. So if your expenditure during the year was $500,000, the total expenditure, and you've spent $260,000 on research and development that you're able to claim in the company's income tax return, and if you have been doing R&D and you're currently not registered for research and development, please contact me and I can take you through the process you've got to go through to be able to make those claims. If your research and development expenditure as a percentage of your total expenditure was more than 15%, but less than 49.9%, you earn 50 points. You've only got to get 100. If the company's been admitted at any time, not just in the last 12 months, but at any time in that 3-year, or in some cases 6-year period, into the accelerating commercialization grant, the company earns 75 points. And the accelerating commercialization grant is a grant of up to $1 million on a 50-50 basis. So $1 million, if you've got $1 million, the company's got to supply $1 million to assist in taking the company from the prototype stage. So you've gone through your major research and development activities, and you're now ready to commercialize it. And commercialization processes cost a lot more money than what most people ever thought of. After all, that's why the government's offering a grant of $1 million to take you through this process. And companies get that grant every month. So that's the accelerating commercialization grant. You can earn 75 points. So if you're qualified under either one of the R&D components, where you've either got 75 or 50 points, and you've also been admitted to accelerating commercialization grant, you have qualified as an early stage innovation company. The accelerator program. These are programs where companies, well, their executives are part of a training process that's undertaken, and it's normally for about a 6-month period. If you've been admitted to an accelerator program, which are basically offered in the capital cities, you earn 50 points. Has the company already raised $50,000 from arm's length investors? So it's not your father or your mother-in-law, it's people who are at arm's length. It can be one lot of 50,000, it could be 10 or 5,000. You earn 50 points. If you've got some registered patents, you can earn points. So if you've got a registered patent or a registered plant breeder's right, either one of them, you only get the money, you only get the points for one of them though, you earn 50 points. If you've got a registered innovation patent or a registered design, one of them, you earn 25 points. So that's the way that this works. It's a self-assessment process. If you've earned the points, you're over 100 in the gateway test, you do not have to submit anything to the Australian Taxation Office at that stage, because that's black and white type proof. You've got it, you're able to prove it. And in fact, the system we use when we're advising clients on this process, our associated company, ESS BIZTOOLS, has developed products which accountants are using all over Australia. We can go through and develop the due diligence review, which is necessary. Ultimately, you're going to have to send that to the tax office. But the main thing to do at this stage is to talk to potential investors, so you can show them that. But if you think you've qualified under the principles test, this is where you've written some essays on those 5 key questions. The assessors are the tax office and Oz Industry, and they will then issue a response to your application. There's a small team in the tax office and Oz Industry processing these reports. Takes them about 6 weeks. I don't think you should be approaching investors to invest in your company until you've got that report back from the tax office, because then you have a document which you can include in the overall due diligence documentation that you need to hand to investors. So they can see that if they invest their $500,000, if they're a sophisticated investor, into your company, they're going to get the taxation benefit, which is $100,000 off their taxation bill, because they're going to get a rebate for that amount, 20% of $500,000. And if they hold the shares for longer than 12 months and less than 10 years, they will not be paying any capital gains tax on those shares. Only on those shares, not some more that they might buy next year. Those shares, they avoid capital gains tax. So it's a pretty big benefit for them. The due diligence process that we would take you through if we were working with you will be to give you the documentation to hand over to potential investors, because they're pretty fussy on this, as you'd appreciate. They want to make sure that if they put their hard-earned money into your company, they're going to get the benefits that the government has indicated will be available for legitimate investments into companies that the tax office and Oz Industry accept as being early stage innovation companies. So the documentation to go through all this process, you shouldn't try to do anything to do with capital raising unless you've got a business plan. And then you need predictive accounting reports, budgets, cash flow forecasts, projected balance sheets. I think looking at least the next 3 years, perhaps 5 years. Where's this business going to go? What are they going to do? What are you going to do with the investors' hard-earned money? Where's it going? What's the reward going to be? What might their return on investment be? They also need a corporate chart. They need to know who's who in this whole organization. Where's it located? What products is it producing? How many people have they got employed? All that sort of thing. And the due diligence report to support the classification as an early stage innovation company is part of all this, obviously. So that's early stage innovation company. We can now turn to the crowdsource funding equity raising, and I probably should be checking to see if we've got any questions. I haven't got any at this stage. My apology, I hadn't looked before, but I've looked now. And I hopefully will remember before we finish. Crowdsource funding equity raising. Another type of company that emerged out of the 2015 innovation policy that the then Prime Minister Malcolm Turnbull announced. So this applies to any type of company in any type of industry that's got a group international turnover less than $25 million for the previous 12 months. And the gross value and the group value of gross assets is less than $25 million. Just coincidental, both of those requirements utilize $25 million as the figure. And when the company becomes a crowdsource funding equity raising company, it must have at least 2 directors, with the majority residing in Australia. As you know, Australian corporate law now for private companies says that a private company only needs 1 director. Well, if you're going to go into crowdsource funding equity raising, you need to have at least 2 directors. You can have 6 or 10 if you want to, but you must have 2. And the majority must reside in Australia. So if you want an overseas director, I think you've got to have 3 directors. 1's overseas. So that gives you a majority in Australia and so on. You need an understanding of the role of the crowdsource funding intermediary. When the government brought this legislation into play, they created some completely new techniques. They introduced this concept of a crowdsource funding intermediary. The intermediary is a business that's been given a license by Australian Security Investment Commission to undertake this role. Currently, there are 16 of these businesses authorised in Australia, but only 2 are really dominating the market. There's another 3 doing some work, and the others we rarely hear from to understand what they're doing. So you need to have an understanding, because the intermediary's role is to act as the gatekeeper for ASIC, according to the now Prime Minister, but then Treasurer. When he introduced the legislation, Mr. Morrison said he sees these people as being the gatekeepers for ASIC. But the legislation also gave them the right to act as promoters. So they talk to people all over Australia, indeed all over the world, and get them to give them their contact details. So they're kept informed of companies that they might like to look at investing in. And the intermediary then runs the website where people have to go to if they want to apply for shares. So there's a proper process. It's been based on similar concepts in the United Kingdom, New Zealand, Canada, USA, Singapore, and various countries in Europe, France, Germany, to mention a few. Most of those other countries have had this process running for 6 years longer than Australia. We took a long time to get round to this, but it's a great way. And over about 140 companies have now raised capital, and you can raise up to $5 million in a 12-month period. And if the company needs more money the following year, they can go back and try and raise another 5 million. Of course, subject to the market supporting them and the intermediary signing off on the crowdsource funding offer document. This won't work though unless you've got a leadership team with vigor and a vision. They need to know where they're going to go. The only ingredient missing is money. They understand everything else. They know where they're headed. That's the sort of impression that the leadership team's got to be able to give. And the document that's got to be produced is called a crowdsource funding offer document. It's a de facto prospectus. It's not as complicated as a prospectus, and it doesn't cost anywhere near as much as a prospectus. But it has to be prepared, and it has to be vetted by the appointed intermediary. The directors appoint the intermediary, and if you're working with me, I'd be going through with you and giving you the pros and cons of the various intermediaries, and we can have Zoom meetings with them or one-on-one meetings. A bit difficult at present because the leading intermediaries are based in Sydney and Melbourne. So if you're interstate, you basically can't go there. But hopefully these lockdowns are going to get sorted out in the next couple of months. It's a good idea to have a social media presence because that can unearth some potential investors. And also to have had some local media stories can also be very beneficial in painting the picture of who you are. The documentation that's required, well, you need a business plan. Everyone needs a business plan. You need the financial forecasts, the predictive accounting reports, pardon me, budgets, cash flow forecasts, projected balance sheets. You need a corporate chart. And then obviously you need this document, the crowdsource funding offer document. So that's crowdsource funding equity raising. Pardon me, it's a process. That can take 3 months. Most intermediaries try to do it quicker than that. And a lot of it's how well the early organisation has been and the social media exposure that the company has. Our offer to you, Very important, I think. I know this is an area that most of you may never have been involved in, or you may only encounter it once or twice in your business careers. I'm happy to sit down and have a free, no obligation, 60-minute Zoom meeting with you. So we go through and look at the situation as it affects your company, what your aspirations are, how much money you think you need, what are you going to spend it on, what's your current financial position look like. We can talk about all that. And then if you wish, I can then give you a proposal as what my organization, Towers Business Development, can do for you. And that's what we've said there. We will then give you a proposal, which will include a quotation so you clearly know what the costs are going to be. Towers Business Development can assist in a wide variety of non-taxation issues by organising regular business review meetings. And I can perform the role as a company director or chief financial officer to assist companies to go through this development process, getting ready to grow your business. Many businesses are finding it's beneficial to have external advisors to act as facilitators. And we can help you on research and development systems if you're going down that path. This whole approach to getting yourselves into an investment ready status. So if you want to know more, you can contact us or visit our website, www.towersbusiness.com.au, or send me an email, peter@towersbusiness.com.au. Or if you want to talk to me, please give me a phone call if you wish, 1-800-232-088. I'm happy to link up and have a Zoom meeting with you. I've got no calls, no messages, no questions. I hope that means that I've answered your questions as we've gone through and had a look at these issues today. To see where your business might be able to go, utilising the legislation that is available, ready for use in Australia. So thank you very much. And once again, if you're watching this recording as live on Facebook and you have any questions, please send me an email. Or if you're watching this recording at a time more suitable for you and you have questions, please send me an email at that time. Thank you very much. Have a great day. If you're in one of the areas that's suffering from the lockdowns, please stay safe. And I hope that normality will return in the not too distant future. Have a great day. And I look forward to talking to you shortly. Goodbye.